Hi, I welcome you to Caroline's Online Academy. This is the fourth video in the series Basics of Accounting. In the last video, we were looking at definitions of certain terms that we'd be using in accounting, and in this video, we would be continuing with the same. This is the basic definitions part 2 video. The first term that we would be looking at in this video is expense. Expense means costs incurred in the business in the process of earning revenue. So in order to earn revenue, we'll be incurring a lot of costs, like we'll be purchasing raw material, using it and all that. We'll be spending on rent, you would pay electricity charges. All of that expenditure that we have incurred to earn the revenue is known as expense. Now, to a layman, money spent equals expense. For instance, if he purchases a car, he would say that he is expensed 4 lakh rupees on purchase of a car. But in accounting, it is not like that. It is only the assets consumed or services received during the period that form part of expense. For instance, let's say I have 4 lakh rupees in the business and I purchase a car. Now that 4 lakh will not be considered as an expense for this accounting year, for this year. Okay. What would be considered as an accounting is the amount of services or benefit that I've received from that car during this year. The amount of asset, the amount of car that I've consumed during the year. Now, what do I mean by the amount of car that I've consumed is, assume that 4 lakh, I'd be able to use that car worth rupees 4 lakh for the next 10 years. Understood? So, indirectly, I'm actually using 40,000 rupees per year. Understood? And therefore, if I use the car for 1 year, then the amount that has to be expensed of, that the amount that has to be considered as expense is only 40,000 and not 4 lakh, the money that I paid for the car. Okay, only the amount that I've used, only the asset, part of the asset that I've consumed is my expense. For instance, if I'm in a groundnut manufacturing company and I've purchased 100 kilograms of groundnut, and I've used only 70 kilograms of groundnut for making groundnut candy in this year, then the expense for this year is only the cost of 70 kilograms of groundnut, and the remaining 30 kilograms of groundnut will be considered as an asset because that has not yet been consumed. Similarly, services consumed during the period or used during the period only will be considered as expense for this accounting year. Okay. The next is profit. In the previous edition of this previous part of basic definitions video, we saw what revenue means. And in this, I just explained what expense is to you. So profit is nothing but the excess of revenue over expense is called profit. By gain, we mean all those things, all those gains, the profits which arise from transactions that are incidental to the business. Now, what are transactions incidental to the business? If I'm in, we'll take the example of groundnut candy manufacturing company, and in the groundnut candy manufacturing company, there is an asset which I have been using for 10 years and it has become obsolete now, and I need to buy a new asset. Okay, and therefore I'm going to sell this asset for scrap value. Now, selling assets is not my business, understood? But as I use assets in the groundnut candy manufacturing process, and once the asset is completely useless, I actually sell it for scrap, right? So from selling it for scrap is only incidental to the main business of manufacturing groundnut candies, correct? So that gain from any gain from selling of that asset would form part of gain, would be termed as gain in the business, understood? So gain refers to all the profit that arise from transactions like this, which are incidental to the business and which is not my main business, understood? For instance, I have a debtor I have a creditor to whom I owe 1000 rupees, and the creditor gives me a discount of 50 rupees. So that 50 rupees discount that the creditor has given me is a gain for me, okay, which is incidental to the main business. Loss. In case expenses during an accounting year or an year is more than the income during that period, then I'm said to have made a loss. Okay, so that is loss. So loss is just opposite of profit. Okay, discount. As I told you, when I purchase goods, if someone gives me the goods for a price lesser than the value of goods, then I'm said to be getting a discount. Understood? For instance, I go and I purchase a pen probably, and the cost of the pen is 100, but the shopkeeper gives me a 10 rupee discount and sells this pen to me for 90 rupees. Then that 10 rupee is my discount. Understood? Now discount is offered in two ways. One is cash discount and trade discount. Trade discount means the discount that is offered while you make the purchase itself, and the discount is listed in the invoice or the cash memo itself. Understood? Now, what I mean by while I make the purchase itself is, before I even have the obligation to pay the money, they would have deducted from the price, and the obligation itself would be the net amount of discount. For instance, if I want to purchase a pen and it is 100 rupees and they deduct 10 rupees and then give me for 90 rupees, then that is a trade discount, because my obligation to pay for the pen when it arises for the first time itself is 90 only. It is not 100, because he's already deducted it while making the sale itself, while raising my obligation itself, he has given me that 10 rupee discount. In case he's given me 10 rupee discount and I've told him that I'll not be able to pay you right away, I'll pay you like 10 days later, and the shopkeeper tells me that in case you pay me in 5 days, I'll give you another 5 rupee discount. So the discount that I will get in case I make prompt repayment of my debts is called cash discount. Understood? So discount can be offered in two ways. One is trade discount and cash discount. Now this can be elaborated more, and I have made a separate video for this, which I will be uploading in a couple of days from now. Understood? So please keep looking out for the video cash discount versus trade discount. The next term that we're going to be looking at in accounts is voucher. What voucher means is any document that acts as an evidence for the transaction, or the number that I'm writing in the transaction is a voucher. For instance, when I go and purchase goods for cash, then the shopkeeper would give me a cash memo. Now that would be my evidence for recording that purchase transaction in the books of accounts. Now when I sell goods on credit, I'll give an invoice to my customers. Now that invoice will serve as a supporting document for recording my sale transaction. Similarly, when I stay in a place for a certain number of days and I'm having to pay the rent, the landlord would give me a receipt for my rent. Now that would be my evidence for the expense called rent that I've incurred. Okay, so any document that serves as an evidence for transaction is known as voucher. Goods. By goods we mean the product that the business unit is dealing in. In case I'm a trader of stationery items, then pen, pencil, notebook and all of that would be goods for me. Understood? In case I'm a groundnut candy manufacturing company, and the raw material that I purchase like groundnut, sugar and all of that, and work in progress, that half made groundnut candy, and the finished goods, that is the groundnut candy itself, all of that will be goods for me. So the products that a certain business is dealing in is the goods for that business. Understood? Drawings is very simple. When the owner invests money in the business, we told that we would call that as capital, right? So if the owner withdraws money for personal use from the business, that would be called as drawings made by the owner. Understood? Now purchase, I just defined goods, right? Whenever I purchase goods, whenever I purchase products that the business deals in, it is called purchase. Understood? So if I purchase an asset, that will not be called purchase in accounts. Okay, you'll understand that more in a better manner when we actually pass journal entries regarding that. Understood? Stock refers to all of those goods, spares and other items in the business which I have in the business to be used further in the business. Understood? For instance, I refer to the raw material, the work in progress, that is half made groundnut candy, and the finished good, that is the groundnut candy itself. All of them are stock in the business. Understood? So spares and other items we'll study elaborately when we study further chapters in the future. Debtors, all those people who owe money to the entity, to the business, are known as debtors. Understood? Everyone who have to pay money to the business is known as debtors, are known as debtors. Understood? Similarly, creditors refer to all the people to whom the business owes money. Like if I have made a credit purchase, I have to pay money to that person who sold me the goods, right? They are my creditors. If I made a credit sales, then they are supposed to pay me money, right? So they are my debtors. Understood? So that is debtors and creditors. So with that, we've come to the end of basic definitions in accounting part 2. So with that, I've tried to cover all the important terms that we would be using in the future, so that you'll have a general idea of what it is. But still, I'll still be explaining all of these terms when we are using them in the context of recording a transaction or classifying it in the ledger and all that. Okay, or showing that in the financial statements and all. And similarly, as I promised you, I'll also make videos which will explain the difference between asset and expense, and cash discount and trade discount. Understood? These videos are made for Indian audience, and therefore English is a foreign language for Indian audience, all of these have to be explained in elaborately. Understood? All of these have to be explained for them to for us to understand what all these are. Like maybe if English was our mother tongue, we need not explain what an asset is and how it is different from an expense. But as it is not our mother tongue, as it is a foreign language, we'll probably have to understand what we mean by asset and what we mean by expense. Understood? And as I promised in the last video, all of these English version of the accountancy classes, I will be transferring it to a different YouTube channel, and I've created one YouTube channel. It is called the South Indian Commerce Tube, and the link to that YouTube channel will be provided under in the description box under the video. You can click on that, go there and subscribe, so that, and also press the bell icon, so that you will know when I release the next video. Okay, so I have four more topics that I have to actually teach in English before I can continue teaching in English and Tamil and release videos in both the channel at the same time. The next 4 videos that I'll be releasing in English will be released in the South Indian Commerce Tube channel. That's South Indian, and after that, every video I'll release both in Tamil and English. The Tamil version of the video will be in Caroline's Online Academy, and the English version of the video will be there in South Indian Commerce Tube. Understood? So that's it for today. You have fun. Bye.